first gold award goes to...
Congratulations India today for Business Today with Deven. Business Today for Easynomics.
And the silver award goes to...
Business Today for Business Today Television.
Hello and welcome from Business Today Television. I am Siddharth Zarabi, and you just saw a small show reel of something that the entire team at Business Today Television is very proud of. A journey that started less than 2 years ago is now being recognized through awards which are meant for you, the viewer, for actually supporting us, for viewing us, and giving us encouraging feedback all the time. So before I start today's episode of Easynomics, I thought we'll take this moment to thank you, the viewer, for the confidence that you have reposed in us and the promise that we'll keep coming back with the best of business journalism all across. So thanks once again. But for today's episode of Easynomics, we have India's most valuable company and also the most nimble, Reliance Industries Ltd, which held its 46th annual general meeting today. Chairman Mukesh Ambani unveiled a roadmap which promises to transform the energy-to-telecoms giant into a pure-play technology company with many other facets of the conglomerate that is called Reliance Industries Ltd. And we're calling it Mukesh Ambani's new game plan for Reliance Industries. And to talk about the future that has been showcased today, we are joined by some of the most prominent names in the market. DrChoksey, the Managing Director of DrChoksey Finserv Private Limited. We are also joined by Vinit Bolinjkar, the Head of Research at Ventura Securities. And I also have with me in the studio my colleague and our markets editor, Shailendra Bhatnagar. But before we dive into what RIL said, and the key headline really there, viewers, is Mukesh Ambani telling us that there will be more value creation in RIL over the next 10 years than what has been achieved in the previous 45 years. But we'll come to that. But let's take a quick listen into what Mukesh Ambani had to say at the AGM.
In just 9 months, Jio 5G is already present in over 96% of the census towns of our country. And we are on track to cover the entire country by December of this year. This makes Jio 5G the fastest ever 5G rollout of this scale anywhere in the world. Today, nearly 85% of the total 5G cells operational in India are in Jio's network. At our current pace, we are adding one 5G cell to our network every 10 seconds, and we will have nearly 1 million 5G cells operational in our network by December. With this massive reach and capacity, here is our promise. We know that every home, small and medium businesses, factories, schools, colleges, and hospitals across India would like to have 5G. From December of this year, we will be able to promptly fulfill each and every demand for JiO 5G broadband connection across the country.
Viewers, we just took one very small cut of what Mr. Ambani had to say, and we took JiO, because JiO is something that millions, hundreds of millions of Indians know, but there's a lot that was said and a lot that was promised. Shell, I'll come to you. It's difficult to digest RIL AGM. It was never easy. There were days when it was held in a stadium, and that was the pre-electronic era in some way, Shell. And now we see successively every year the RIL AGM gets even more layered and has multiple perspectives. What is said is important as much as what is not said. Shell, your key takeaways before we go across to our guests.
Firstly, Siddharth, it's a pleasure to be on your show, and congratulations for so many awards that the entire team won. I'm sure there's a party in the pipeline somewhere in coming Friday, and we'll all celebrate that. But coming back to the AGM, yes, it was a 125-minute speech, and Mr. Ambani touched upon 4 facets. You and I can discuss telecom for at least 12 hours without repeating anything, but the fact and the meat of the matter was JiO Telecom. And a lot of things have already been in public domain, one of them being that it's a 45 crore user behemoth, which is going to get bigger and better even from the current levels. And the primary driver for that particular growth will come from the 999 rupee Bharat phone, which the company has introduced. There will be a UPI interface. So that is as far as telecom is concerned. I'll just give you a broad brush. We'll discuss everything in great detail. And of course, it was Jio Financial Services, the latest and the newest baby that Reliance Industries has birthed with a ratio of 1:1 on the stock. Lots of developments likely to come in on that particular thing. And finally, clean energy. Siddharth, the 75,000 crore capex plan that was announced in the previous AGM, Mr. Ambani gave a lot of details on those as to where the mega factories are coming in, what is the update on the wind turbine blades, what is the update on battery packs, all that was elaborated upon. And lastly, the final line was, you mentioned right at the top, at 16.5 lakh crore rupees as market cap on today's close, Reliance promises to deliver multiple times the value over the next decade till 2020, till 2033 than what it has created in the previous 45 years. Siddharth.
Absolutely. And one of the other headlines, and Deven bhai, I'm going to come to you on that, because that sort of also is one of the more important signals, announcements that was made, which is in some ways this succession plan. The 3 children joining the board of RIL, and also a statement that was reported on Newswire services that Mr. Ambani will continue to stay as the chairman for 5 more years. Before the operational aspects, I thought a quick comment about the significance of this statement, Mr. Choksey.
Hi Siddharth, hi Shail. Thank you for having me on your show, and congratulations to you for winning awards. I'm sure I think your continuity will be, I think, much bigger hereafter in bringing up the quality contents to the viewers. Well, I think the important point which I observed from this announcement, which you mentioned, when the children are in their early 30s, you bring them up onto the mainframe in a systematic manner in presence of some of the most matured stalwarts, I think, who are sitting in the board. So in the process, I think you are training them, you are grooming them, you are bringing them up to a level at which I think they are expected to perform in subsequent years. If the earlier 5-7 years since they joined the company, I think they have been mentored by some of the best professionals. Today, I think they would be probably taken care of by some of the best and matured board of directors, which according to me, I think is a sign of a very good matured company, which inspires a lot of confidence in the minds of investors that there is a transition happening, but the transition is happening very smoothly, so that I think there are no jerks at any point of time in the business environment. So must congratulate Reliance for leading the path on this particular subject.
Also reflecting the kind of depth that RIL has when it even comes to communications, and I'm not just talking about their comms networks. Vinit, a quick comment, opening one from you before I get Shell into the debate. What's the most important takeaway from this very long series of announcements today, according to you?
See, actually, it was well required and well deserved the way the entire presentation was handled. It had shown to the market that, Mukesh Ambani is here to stay for the next 5 years. And, his family will be onboarded and they will be groomed over the next 5 years to build on this huge gargantuan behemoth that we have. The other thing was that, where you would have thought that, the businesses have somewhat matured, the traditional businesses of JiO and O2C and upstream oil, there is substantial growth levers still pending in these. And while these will be contributing to the growth that is coming about, the emerging businesses of hydrogen, of the other businesses of AI and retail will also be coming in, and the financial services that are coming in. So these all together are going to keep the growth meter ticking for the next decade, as Mukesh Ambani promised. And it's spelled out in no uncertain terms where the growth is going to come from and what is already in the basket in terms of the growth. So I believe that the growth is what the market would be looking for, and that has been amply made visible by the way the process has been chartered. And I think that is the biggest takeaway for me from this AGM.
Right, Siddharth. I'd just like to add to both what Deven Bhai and Vinit has just pointed out. Mr. Ambani laid out a very critical and detailed roadmap of what is coming over the next 4 or 5 years. And he always mentioned that, each year and each decade, Reliance is getting more and more valuable for its shareholders. And what's in the future is even more exciting. He mentioned that, the game plan was that India has always been a supply constraint market, and there always has been more demand than supply of any quality product that you could think of. And that was the reason that the three engines of growth, which is JiO Telecom, a very well-defined roadmap there, Reliance Retail, you've just seen a 1% stake being sold to Qatar Investment Agency for about $1 billion. And in the depth of COVID, when the transactions were happening on Reliance Retail, the valuation of that particular business was 4,29,000 crore rupees. At this valuation, the current number now stands at 8,29,000 crore rupees. So the valuation has doubled in a span of 3 years. And it is these growth curves, Siddharth, which are coming in via Jio Financial Services, via the Clean Energy Initiative, and of course the green hydrogen part, which are going to ensure that the growth meter in Reliance Industries continue to tick as far as new businesses are concerned. Mr. Ambani mentioned something very critical. He said, we are a pure play technology company. Absolutely. We talk about, telecoms, we talk about energy, we talk about retail, but he said no. At the top end of Reliance, it's a pure technological play.
In some ways, Shell, that's a very nice point that you pick up, because when he says that technology and a pure play technology approach, that doesn't necessarily, viewers, only refer to telecom technology.
Absolutely.
He's talking about technology across multiple business segments that they operate in. But Shell, let's take up telecom for a moment, and yes. Deven, I'll come back to you with some of the 3-4 key points and put it in context for Jio as India's largest telecom service provider. A new fixed wireless access JiO Air Fiber by the middle of next month. A Jio Bharat phone, which is, he says, is expected to draw a bulk of 2G users onto the network. Announcement that 4G users can be shifted to 5G with minimum capital expenditure, along with the fact that all India complete rollout of 5G network will happen in a matter of just 4 months, which is even ahead by a very significant stretch from any other company. And finally, that Reliance Jio now has ambitions beyond India. 450 million subscribers. I'll take that last point first. Mr. Choksey, what is Mukesh Ambani hinting at, given that there is already one telecom company which many years ventured into Africa, that was Bharti, and we saw what happened to valuations and the share price afterwards. What is Mr. Ambani hinting at according to you?
So, well, I think it's a loaded question, but let me attempt an answer to put across, I think, the numbers. Already you have got mobile telephony. It's at a beginning stage, which is a low-hanging fruit, wherein you acquire the customer, the direct-to-customer services, I think it's through mobile telephony. You transit them into the home segment, and you transit them further into the enterprise segment. An enterprise segment would require the whole lot of technology which is required to run the enterprise, be it cloud computing, be it blockchain, be it artificial intelligence, be it machine learning, digital learning, or even AR, VR, MR kind of blocks which are required for the purpose of providing the solution. And here they are talking about giving this entire network to the developer who can basically customize the development of application on the top of it, be it in the area of media, be it in the area of entertainment, be it in the area of education, healthcare, gaming, or so and so forth, or e-commerce for that matter. Each of these particular applications required by whatever the enterprise they want to run this activity as, they can be offered onto the platform which they have created using the technology blocks. That is where they ended up saying that it's a technology company. In my viewpoint, I think these 45 crore customers that you have in mobile telephony, they are the last mile connectivity. Now, I think using that last mile connectivity, you take him to the home connection, you take him to the enterprise connection. And ultimately, I think grow the size of the business, which is basically right now growing at around 20% rate of growth. In my viewpoint, I think if 20% rate of growth is doubling the company in 4.5 year time, here is a situation wherein I think with this home segment and the enterprise segment coming into play, which may double the size of the company from current 1,20,000 crore revenue and 50,000 crore worth of EBITDA. In 2 to 3 years time from now, I think it should double the size to somewhere around 1 lakh crore EBITDA, given the kind of a proposition on which they are basically wanting to deploy different products, be it in the home segment through set-top box or be it in the enterprise segment to the bunch of technology that they have. So according to me, Jio platform is transforming and transforming big time in contribution. As far as I think the profit contribution is concerned, it's transforming big time into the books of Reliance. And that is where I believe that I think things are getting completely changed. The consumer-facing businesses like Jio platform, consumer-facing business like retail, and also now I think the business of Jio Financial put together, in my viewpoint, demonstrates the possibility of contributing 65 to 70% of the total EBITDA eventually into the books of the company, vis-a-vis O2C business and oil and gas exploration business of around 30 to 40% kind of EBITDA contribution. So this is the game plan which probably I read from this particular speech that has come up today in the AGM.
Siddharth, there are a lot of interesting data that I'd like to share as far as the telecom business is concerned. Deven bhai very rightly mentioned that the EBITDA for telecom is at the moment upwards of 50,000 crore rupees. And if you see the overall group EBITDA, that's 1,53,000 crores. So already 1/3 of the operating profit of the entire Reliance Group comes from its telecom business, and this will increase dramatically. Mr. Ambani shared a lot of data in terms of data usage. You'd be surprised to know monthly data usage is now 1,100 crore GB, up by 45%. And he mentioned 2 or 3 cataclysmic events that happened. One of them was IPL. the digital viewership of Indian Premier League, the 2020 cricket format, was actually more than terrestrial. So these are the data which are actually driving this EBITDA and driving this growth in telecom. And I'd like just to share with viewers that both Siddharth and I, in our previous lives in the previous century, covered telecom a lot. And in the newsroom, Siddharth never fails to mention, how difficult it was to wire your last mile home, or wire your office in Connaught Place, or in Jorbagh, or in Nariman Point, or in Jubilee Towers in Bangalore. And this is where technology comes in, Siddharth. Both of us know the pain that was there about 20 years ago, in which the entire country was wired up. This is JiO Air Fiber. So it's taken Reliance Jio 7 years to come to a number of 45 crores in terms of viewers. The next 200 million is coming very quickly. My limited point is that.
No, that's not a limited point. In fact, that is I would say, chasing a new segment from a higher margin perspective.
Yes.
Deven also indicated towards that there are limits to which you can chase a normal wireless mobile subscriber. After all, how much more data? And there is a price that's now been set in people's minds. And Vinit, I'm coming to you on that point. Add to that debate, and also just one quick addition. I was going through some stats for our digital payments, and what struck me was that all of what is happening in digital payments also has at its core a fundamental driver, which is very cheap data and very ubiquitous networks. None of this would have been possible had we not had that. But come back to the point, what kind of margin improvement, EBITDA improvement can we see with this foray, where RIL is now going to chase the broadband market just like it chased the wireless communication market?
So, I think we can see EBITDA margins grow multifold from here. The reason being that, your broadband digital user is a very sticky consumer. And, you are going to, build your visibility of revenues for many, many years. Because, once broadband gets into the house, it does not really go away.
Correct.
Right? And on top of that, you're going to build a smart home, right? And you're taking the subscriber base from 10 million to about 200 million, which is a 20x kind of an opportunity, which is phenomenal. Okay. Apart from that, on this, you're building your Jio platforms, which you'll be selling to individuals. You're promoting your media and entertainment business. And to this, you're adding the various flavors that are coming in from the various Jio platforms that are there. So, the growth exponential journey of this entire Jio piece is going to be a mind-boggling number, which I would like to say that, it's going to see the EBITDA grow faster than the revenues, and the operating leverage will start playing out.
Vinit, while we discuss some of these numbers, and there's a lot of euphoria also attached to them, justifiably so, what is the downside, if at all any, in these projections?
See, there is not any significant downside out here because of the very simple fact that, you are providing services at the lowest cost. And even in the fringe players, which are the entry-level users, you are at a significant discount to the competition. So there is very, very limited downside risk from these kind of numbers.
Okay, fair point. Shail, unless you want to add anything else, we could probably try and move on to Jio Financials. In some ways, the new kid on the block, Deven Bhai, but before we do that, let's try and listen into what Mukesh Ambani had to say on Jio Financials.
JFS will massively increase financial service penetration by transforming and modernizing them with a digital-first approach that simplifies financial products, reduces costs of services, and expands reach to every citizen through easily accessible digital channels. For tens of thousands of small and medium enterprises, merchants, and self-employed entrepreneurs, ease of doing business must mean ease in borrowing, investments, and payment solutions. JFS plans to democratize financial services for 1.42 billion Indians, giving them access to simple, affordable, innovative, and intuitive product and services.
Viewers, there's a reason we are doing and structuring this show in this manner, because like the experts on our panel have told us about the importance of JiO, the telecom part in terms of contribution to the financials, Jio Financials will also tell you about where the next step up of growth and the integrated play that Mr. Ambani has referred to for almost a decade plus now is going to come from. Shail, again, we'll follow the same format because the show's name is Easynomics. We are trying to kind of keep it simple for a much wider audience. What did you make of the statements on Jio Financials?
So, Siddharth, it's really interesting that a company that's recently listed on the bourses via the demerger from the parent in the ratio of 1:1, Mr. Ambani chose to speak for about 14-15 minutes out of the total time frame of about 120 on this new business, and perhaps this is the biggest game changer that's likely to hit the financial markets over the next 2-3 years. I'll try and get Deven bhai into this, since in the market there is this broad understanding that nobody understands Reliance's better balance sheet better than Deven bhai. Deven bhai, your off-the-cuff view on Jio Financials.
So I think, Shail, of the 4 verticals that they have talked about, the first vertical, of course, I think is asset management vertical, where the tie-up is with BlackRock, the largest company of the world, probably. The second most important tie-up indicated is on the insurance side with life insurance, general insurance, and health insurance, where again, I think the tie-up is likely to be with some of the larger companies of the world. The third most important activity which the company is basically talking about is the payment solutions. And most likely these solutions are being provided to all the payment providers, I think using the blockchain technology, which is going to be ultimate success of this entire payment mechanism. And the most important thing, where I think it's a low hanging but at the same time growing extremely fast, is your NBFC business. In NBFC business, Jio Financial is registering as the third company with the size of the network that they have, which is after SBI, HDFC Bank, and thereafter Jio Financials, far overtaking Kotak Bank, ICICI Bank, and host of other banks in the picture. They are basically assuming the entire B2B segment and B2C segment, where they have got customers already acquired. On B2B segment, they have got the Kirana merchants, who they are targeting about 2 crore Kirana merchants onboarded. And in the B2C segment, they have got all the retail segment customers, which are their physical stores as well as their digital Jio platform and the Jio Mart platform. There the customers are being targeted for, along with, I think, the financial market customers available onto the money control platform. And at the same time, I think the mobile telephony customers who are also available. So when you have the size of balance sheet, which has got the ability to lend money, and when you have the customers already acquired, where you can do cross-selling, your monetizing the business happens, I think, extremely fast. I think nowhere in the planet probably you would find a similar kind of a proposition today, wherein I think you have got so many number of customers already in the books, which are now being basically catered to with the money that you have in the balance sheet. If this situation happens, my understanding is that I think they are addressing a total addressable market of about 50 lakh crores eventually over next 3 to 5 years time. And should that be a situation, probably they would be registering themselves as the tallest company or the largest company in the entire space with SBI and HDFC Bank in 3 to 5 years time. So in my viewpoint, I think this is where I think the strong proposition is. In my viewpoint, I think this is where probably you are likely to see a multiplier rate of return for investors, because this is, as I said, I think is a low hanging fruit for them because of the customers they have it, and the balance sheet have it on the other side. That is where probably I think one could possibly go for Jio Financial Services. Each of the four verticals have got the distinct amount of advantages that they have in form of customers. And probably I think that is the fastest way to scale up on the business side. One will have to be very interestingly looking at how exactly these business plans gets rolled out over next 3 to 5 years time from now.
Deven bhai, that's a very good answer, especially the numbers that you shared with us, 50 lakh crore. Vinit, I want to come to you on that, and at some point we'll also try and play out a small bite. In fact, if we can, I'll request my producers to play out what Larry Fink of BlackRock had to say, and then Vinit, I'll come back to you on the same subject. Let's take a quick listen in.
It is an honor to have the opportunity to address the Reliance Industries annual general meeting, and I couldn't be more excited about our new partnership. For 35 years, BlackRock's mission has been to make investing easier and more affordable for millions of investors around the world. That's why I'm so proud of our forthcoming joint venture in India with Jio Financial Services, a company built by Reliance Industries. Our companies have a shared vision to create better financial futures, and Jio BlackRock will deliver our combined expertise and scale to unlock the power of investing for millions of people throughout India. BlackRock is already one of the largest non-Indian investors in India today, and India lies at the heart of our global platform.
Vinit, many years ago, we had another company with a similar first name, that was Blackstone, and that was also involved in RRVL with Telecom, but now we have BlackRock. Put it in context for the average viewer who's been looking at some of these numbers, especially price discovery. It slipped from 200 to 215 from 261. Is it fair value?
See, you cannot justify the value out here because, you are buying a company with an already established client base. So to make things more, put it in perspective is that, Jio will have no burn of money, to acquire customers because they already are sitting on a huge database of customers. And they have a tendency to know how the customers spend their money, where the money goes, right? They have all that data with them. It's all about mining the data and segmenting the data and offering products which will entice the audience there. And you can subsidize the cost of acquisition to make it more remunerative for these customers. So this is where I think the game that is going to be played out is the innovation of the products that come in, which Reliance is famous for. Like we've seen the most cheapest data services in the world for your handsets. So this is where Jio Financials is going to come in. And another thing that we have to understand is that despite having a very large and very reputed players in the market, India is a very underbanked country. Right? Just to give you an example is that if you take the MSME space, right, it can easily become a 2 to 3 lakh crore market in no time, and that is the intent of the government to, they have a special platform for that called the OCIN. Okay. So I believe that, they can tap that MSME network. And if you talk of financialization of assets, which is already an established trend, I think with their innovative products that they plan to bring in with BlackRock, which would be cheaper than the other products, they can accelerate the trend of financialization of assets. So you have payments on one side, you have because of you got a 40% market share in handsets. You have financialization of assets growing very strong. You have e-com platforms, right? And now you are getting into the funding side of it. And you have the consumer funding, you have insurance, you have payments, and you are also getting into lending to enterprises. So I think this is a fantastic fit. And after all, they know the data usage of all these different segments of consumers. And I think that the growth journey for Reliance is going to be far faster than even some of the other established players that they've had in their heydays.
Vinit says growth journey will be much faster, and I'm reminded at this stage, viewers, of something that happened and was the plan almost 20-25 years ago, when RRVL at that stage made the first foray into telecom and also started seeding a play where the petroleum business would become a distribution last mile led business. There would be a retail play around that, and also there would be a large SEZ play. That plan is now in the past, but several things, including the regulatory landscape, also changed. And Shell, the key point that the reason I gave this example is for you to kind of draw parallels or lessons from history, because the dominant players in petroleum retail, in fuel retail, were dominant then, continue to be dominant then, and pricing was administered. Now, that is not the case in financial services, but there are multiple very deep-rooted players. Is the point that Vinit made, that growth will be much faster, something that you agree with, Shell?
Yeah, Siddharth, I'll give you another example. You see, when we live in the urban landscape, as the four of us on our screen do, two people from Mumbai and two from Delhi, we are overexposed to all kinds of financial services. We have more insurance than we need. We invest in funds which are more in number in terms of fingers on the hand. So that is not the case with rural India. Mr. Ambani made a very good statement when he said that in terms of financial services, Jio Financial aims to replicate India's dazzling growth in Bharat, where thousands of people will now have ease of borrowing, ease of payment solutions, and of course, as Vinit bhai and Deven bhai mentioned, the financialization of assets. Siddharth, one of the key growth parameters in the financial markets has been the easy and cheap availability of data over the last 7 years. And we've seen that work wonders in COVID. If you look at how monthly SIPs have grown, the underlying factor has been ease of connectivity and ease of doing business.
But Shell, while you mention these, I'm interrupting you because in telecom, in the second coming of through Jio, price was the key differentiator.
Yes.
The product kept expanding and evolving later. It was a price warrior.
Yes.
Is there scope for the future JV to play the price game in this sector?
Yes, and you hit the nail on the head, Siddharth. Let me explain. If you are able to reduce the cost of transaction to at such a low point that it becomes, how should I say, irrelevant to the whole setup. Imagine doing a SIP in a mutual fund offered by Jio Financials and BlackRock at 10 rupees a day. You remember, across rural India, there is something called a chit fund, right? You give 10 rupees, 25 rupees, 35 rupees to a vendor who comes to your thela on a daily basis, and that money accumulates over a period of time. Now, with Jio's technology, probably a 10 rupee daily SIP genuinely becomes a possibility that we might see coming in the next 2 years. We already have the minimum SIP at 500. So, what is preventing, if you have the cost of technology as the right parameter, to do a 10 rupee SIP on a daily basis? Imagine a lady selling fish in Bombay's fish market being able to do it. So that's both financialization of assets as long and a welcome inclusion to the growing market that Deven bhai and Vinit address. Siddharth.
Deven bhai, before we move on to the third vertical, summary comments on this debate, because while the plan is ambitious and many of the tent poles required to deliver what Shell is talking about do exist, will existing players be pushovers?
I don't think so. Frankly speaking, I think there is going to be enough amount of place for most of the players in the universe, I guess. For a simple reason. Some people are talking about India economy touching $10 trillion by 2030. I would carefully put across that number at 2035, say 10 to $20 trillion economy by 2035, which is almost four times the size of the economy from what it is currently. Now, if that is going to be a situation, the demand for credit, both from the retail segment as well as from the corporate segment, be it SME, MSME, or even the larger corporates, infrastructure segment included, I think it's going to be only in rise. And the companies which are having stronger balance sheet will undoubtedly have higher amount of advantage. In fact, I think the categorization should be that company with a stronger balance sheet and company with a fintech employed will be, I think, at a distinct advantage vis-a-vis those companies which are having relatively smaller balance sheet and less of a technology employed. In such situation, I think the companies with an advantage of using the technology to acquire the customer, technology to lend money to the customer, and also do have the balance sheet to basically extend this particular funds on an ongoing basis, on a sustainable basis, they would definitely be the topmost leaders. And that's where I feel that the Jio Financial Services would probably be among the better of the lot because they have the technology as far as I think they reach to the end customer is concerned. They have the strong balance sheet, which we talked about a while back, and both this particular aspect is definitely getting better with the number of customers that they already have, which is basically giving them an opportunity to expand the size of the market faster. That does not mean that other players have not got this particular thing on equal basis. They too have relatively a stronger ability to acquire the customers in the business, particularly because of the size of the market itself, which is growing. So we'll have to keep our eyes and ears open. Probably, I think if a simple analogy, if I can put across on a highway, some cars would be running faster and some cars would be running thereafter. Maybe I think everybody will have a ability to reach to the destination.
Absolutely, and the way expressways are being built in India, Deven bhai, there is more than enough space. We'll have to see, perhaps Shell do a separate show on what the Jio app and Jio services will look like. But one final point on this matter, and viewers, please remember how you purchased and managed to activate your mobile SIM before Jio's Aadhaar linked eKYC. Completely seamless, very little paperwork, and how that panned out and changed the entire telecom space. But we'll now come to the third vertical, which is clean energy. And Mr. Ambani spoke about that at length, and he said green energy is secure because India will no longer be dependent on large-scale imports for energy needs. Let's listen into a quick bite and then go to our experts.
We took to solving the problem of severe pollution faced by many of our Indian cities during winters caused by stubble burning and accelerated our plans to deploy bioenergy projects. India produces nearly 230 million tons of non-cattle feed biomass, most of it contributing to air pollution. Within a short span of 1 year, after setting up 2 demo plants for compressed biogas at Jamnagar, we have commissioned the first commercial scale compressed biogas plant at Barabanki in UP in a record time of just 10 months. We will rapidly scale this up to 25 CBG plants across India.
Deven bhai, explain this entire plan, because we know that RIL has embarked on a transition from the O2C into a sustainable and green business, and many other Indian conglomerates are talking about it and intend great plans in this regard. Explain this to the average investor viewer, what Mr. Ambani is really up to.
So, a fair proposition on the renewable side. On one side, you have got the solar-based power, which is getting produced through rooftop solars, and including, I think, the solar farms for the industrial use. On the other side, you have got the onshore and the offshore wind turbine, which are producing wind-based power And that is where probably I think you are now talking about the third significant amount of power being utilized for the purpose of industry, and that is where the green power being utilized for the production of green hydrogen. I think the hydrogen as a substance of power is going to be more used for the static use purpose. And the static use would mean that I think higher power consumption companies like metal commodities, like refineries, petrochemical specialty chemical complexes, etc. They would be the high consumer of powers, and to them, the hydrogen is the most favorable power, provided the entire electrolyzer process runs on a green power which is produced by solar and the wind. So using the wind and the solar power and directly putting them onto the grid for 24 hours, which they have indicated, I would think that I think the green power, given the input into the electrolyzer, probably would result into a significantly lower cost of hydrogen, which also was confirmed in the speech today. Given that proposition, according to me, the power cost of industry, which currently holds around 12 rupees to a unit, has a potential to come down to 3 rupees to 3.5 rupees per unit. Now, if this is going to be a situation going forward in next 7 years or 10 years time, that means that I think the cost of producing the production of industrial metals, particularly in other sectors where the power is big time consumed, will come down. And that could possibly be a game changer for a country like India, because I think we are hungry for making exports. This is one possibility that we are talking about. On the top of it, I think there is another possibility which is being talked about, which is a CBG, the biogas, compressed biogas business. Agri waste in this country is significant. Some of the cement companies have shown the way to use agri waste by putting them into clinker and producing the power. Now, if you have a systematic way of, I think, using the agri waste and producing the CBG, the biogas, you are not only reducing the pollution, you are also reducing the amount of import. And that is where I believe that I think this particular subject is going to create a significant amount of, I think, opportunity for the company like Reliance. So, in my viewpoint, along with that, I think the fifth vertical in the renewable is a storage vertical, be it a typical lithium ion storage batteries for the mobility use, or be it, I think, the sodium ion storage battery for the large scale or the bigger battery use. All these areas are likely to create a game changer proposition in the renewable segment. So one can remain reasonably optimistic about the prospects going forward.
And Siddharth, this was the 75,000 crore rupee expansion plan that Mr. Ambani had announced last year. He gave a lot of details on, which factory is doing what is the stage of production, and so on and so forth. But Vinit, coming to you, and the fact that we've seen a very nice macro roadmap being given for the next 2 or 3 years, but the fact remains that Reliance has been a relative underperformer in the markets in the fantastic rally that we've seen so far in the year-to-date kind of a scenario. What do you think is holding back the stock?
See, you have to analyze Reliance's performance over a few decades. If you see, Reliance has not, it has moved in spurts and then it takes a prolonged rests. So, there was a big run from 2003 to 2008. Then there was one run during the 2019 to 2023 now. And, right now it is going under a process of consolidation. So that is where, while the market has been moving up, Reliance has been moving a little bit sideways. But I think, the bulk of the investments have gone in already. So if you just notice the JiO business that we are speaking about, the telecom business, it is ripe for milking the segment with higher margin products. Okay. Jio Financial Services, as I told you, has a runway which can move very fast. India is an underbanked country. You have the best of data with you. And, you have to only dwell on product innovation to kickstart that engine. So I believe that these two, along with retail, where they're already present and the margins are moving up, all these three together will take care of the short-term growth drivers that are going to come. So I think FY23 to 26 is going to be all about the Jio platforms, Jio and retail, and also the financial services. And beyond 26 to 30 is going to be about the energy business that is going to come. So I believe that this next leg of growth where uh, Mr. Mukesh Ambani pointed out to creating greater value than what was created in the last 45 years is primarily going to come from.
Absolutely, Vinit. In fact, Shell was just telling me offline that while Mr. Ambani has sketched out these plans and many other companies also have plans for green energy, the cost of power per unit in our neighboring nation, frankly, a bankrupt nation, is almost 50 rupees. But I don't think we should even bother with such comparison. But the big picture really is the next wave of growth from RIL and a period of transformation which actually started well over 20 years ago. Certain steps, certain projects, but now post-COVID, very clearly RIL completely unveiling a new roadmap, and today at the AGM, Mr. Ambani providing more granular detail on what this company will be all about, and the promise that in the next 10 years there will be more value creation than the past 45, and that I think will be the central message that all RIL shareholders, analysts and market watchers will be keenly looking forward to. Deven bhai, thank you very much for joining us and discussing this at such length. Vinit, again, thank you very much for your time, and Shell, thank you for bringing in some of those insights. With that, it's a wrap on this episode of Easynomics, where we spoke about Reliance Industries. We'll be back with more. Until then, do stay tuned in. Goodbye.